Hi everyone, my name is Muskan Arora and I'm a reporter at Markets Group and welcome back to another Markets Group podcast. As allocations in healthcare and technology rise, we have one of the experts from Callan, David Smith, to talk about sub-strategies and subsectors allocators should focus on while investing in private equity. This one is a very exciting conversation and I hope you enjoy it.
So as most allocators shift towards healthcare and technology investments within their private equity sleeve, is there any other sector that you see developing?
I can't say there's any specific sector outside of healthcare. I do cover healthcare, so I'm a little biased. Developing, but just in general, most clients we work with are really seeking managers who are executing a more value-focused investment strategy. Just kind of in general, looking across buyouts. We do have, a lot of people. You look across the industry are a little skeptical that we're going to get a soft landing. That is this truly achievable? So they're really looking for other investment strategies, within buyouts that are going to perform well in a softening economy, whether that be the buyout manager that really has a deep value focus or distress for control. So not necessarily specific sector, but more strategy driven than sector driven when you get outside of those other areas.
Absolutely. And could you highlight a few strategies there?
Yeah, so I kind of mentioned a little bit, really managers that have a deep value focus or distress for control focus would be the two areas. So managers, I'm looking for, like a buyout manager that would be buying companies that are going through some sort of, say, operational or financial distress, buying them at below market multiples, and then, coming in with a good operations team and turning those teams around, bringing in new manufacturing system, lean manufacturing, new operating systems, maybe new back office technology. A lot of times it's a new management team as well, because they tend to be the problem that put the company in distress to begin with. And then going from there and then building the company out organically and via acquisition, over the next 5 to 7 years. And then as they build the company, exiting into growth.
Absolutely. And is there a target cohort or an age group that you think drives certain sectors, let's say healthcare? Which ones and why?
Oh, absolutely. Especially, with healthcare is definitely the baby boomers. The baby boomers are getting older, as we all are. And, it's really this graying of the world population that's driving the need for healthcare services and advancements in diagnostics and treatment of diseases, whether it be, dementia, Alzheimer's, or any others. But, because generally speaking, as we age, we require more healthcare services. And as the population gets older, it's putting definitely, we've seen it already, more demand on healthcare facilities and demand for advanced therapeutics and other medicines.
So do you think that after this certain time period, baby boomers would require something else? Like any other shift that you notice in, let's say, the next 5 years that you anticipate?
It's interesting. Outside of buyouts, we see a lot of people talking about, geographic changes, shifts, population changes, like here in the US. A lot of these baby boomers that live in the Northeast and the northern regions moving south, looking at real estate opportunities and things of that nature. I don't cover those areas, but I do know there's managers focusing on that because you see real estate prices moving higher, demand for housing, and really even healthcare in those areas, and have more healthcare facilities, whether it be elder care, things of that nature, in the southeast regions and the southwest regions of the US in particular, as these populations get sick of the cold and the snow in the Northeast. They'll move.
Absolutely, that makes sense. And could you highlight, I know you mentioned a few like subsectors and you mentioned a little bit of strategies as well, but could you dive a little deeper into subsectors and sub-strategies like location, as you mentioned, and within healthcare, are there any particular subsectors and sub-strategies that you find interesting?
Yeah, I think, given just in general with the advancements in technology that we have with AI and machine learning, I really see opportunities across, drug development. This is something that AI and machine learning will hopefully, I see AI as a tool to support drug development and other technology across healthcare. So just the ability to speed up the time, to do research, look at different chemical compounds, how combining these combinations can help create new optimal drugs. It can help identify, and also I see it as a diagnostic tool. As humans, we are certainly imperfect. As much training as our physicians have, I think having such, AI technology to support that, whether they're reading X-rays, looking at diagnostics, looking at what a patient's symptoms patients are presenting, and AI again is not by itself, but as a resource or a tool to support physicians, physician practitioners, such as physician assistants, nurse practitioners, and nurses in helping to treat patients and to get better outcomes. I see that as a big part of what you do. Also look at other areas such as administrative health tech, incorporating AI to kind of meet ease administrative burden, help to reduce costs. Healthcare is very expensive. Some areas I think have gotten, you mentioned this earlier, have kind of gotten saturated. Physician practice, rolling up physician practices, I think is multiples have gotten high. Veterinary services, you look at 5 or 10 years ago, this was a great space, but I think it's very, very saturated. I've seen some recently looked at a co-investment opportunity, and the multiples look like it was a tech company. It would just, to me, it would just seem a little absurd that they're so high. So those areas I would say are areas that would be non-starters, or at least very minimal, if any interest at all. But areas that I see getting more attention, I think are more important, just behavioral health, mental health services. I already mentioned drug development and pharma services in general, more areas that I see managers starting to get more active in. And I expect those areas, and they're fairly new, so I just see more opportunities there. So I don't believe they're saturated.
Absolutely. And any particular regions you want to specify where they are working well and they aren't working well for allocators?
Or geographic regions, or
Yes.
I can't say any particular are not working well. I just see, demand wise here, speaking just here in North America, as I mentioned earlier, where the population shifts geographically, there would be more demand, in the warmer states here in the US, and could see, just a higher need for more facilities, more just really facilities across the Southeast region in the warmer states here in the US, and all that goes with that, right? If you have an elder population down there, they're going to need more care. So there's going to be more demand on administrative services, more demand on physician extenders, anybody in the healthcare system, more demand for maybe even, value-based care providers as well, where it's really focused on more of the outcome than it is, traditionally here, it's been a pay for service. Because healthcare is, you go in, you see the doctor, they pay you for what you did. You don't get paid for. Doctors aren't reimbursed for the quality of the care they provide. See more focuses on that, but it will be nationwide. I expect it in any population area. But you see, as the population shifts to the south, there'll be more demand in those regions.
Absolutely. And globally, are there any sectors that you think, regions also, like you think that allocators will shift towards in terms of healthcare?
Not in particular. I think it'll be similar to the US. It'll be, more of a regional focus. I'm not as familiar with it. I can't really answer that one that well.
No, I
But
absolutely.
my focus is really primarily on North America.
Sounds great. Yeah. And why do you think there's a shift in this towards this sector? Like, what are the advantages that the allocators are getting?
We've touched on this a little bit already, and it's really shifting. The number one driver would be shifting demographics, the aging of the population globally, really, but also the advances in medical technology, information technology, and that we've talked about a little bit. And also healthcare in general is a very fragmented market. You have physicians all around the country running small operations, maybe in small practices, maybe a dozen or so physicians working together. But those type of opportunities, and also just you look at, the US, I'll talk about the US. You look back, right now, healthcare in general is about 17% of GDP here in the US, which is about $4.5 trillion in annual spending. The projections are for this to grow the rate of a compound and a CAGR about 5.5%, which will get it by 2028, so not very far in the future, to somewhere between 19 and 20% of GDP here in the US. So you have one of the largest components of the national economy here in the US, growing at a very stable rate, around 5.5%, to where it could be the largest component of the US economy. And it's also very stable. We all need healthcare, no matter what age group you are. So it's a very stable economy. It's got the kind of the wind at its back and growing into the future. So it's very appealing. It's that non-cyclical nature and the stable demand, is very appealing for investment.
Absolutely. And we've kind of touched on what its advantages are and, how it's helping allocators to make more returns. But what are the major challenges that you'd say that allocators would face while investing in healthcare?
I think some of the most challenging parts for allocators looking at it is understanding the technology. We are not, when you look at all of us that work in finance, we are not experts in AI. We are not experts in chemical engineering, the things you need to understand within healthcare, just healthcare and tech in general, and how, tech enables healthcare is really changing how the delivery of healthcare and the diagnostics of diseases. So we really look for, as an allocator, for managers that have these expertise. They maybe either hire them in-house, that they bring in, kind of an army of PhDs that really understand the science, and can really make that more approachable for those of us that are not scientists, so that we can understand it and make good investment decisions. I think that's I think a key to being successful going forward is having a team of researchers internally to a firm that can really tear apart, what science is real, what science we believe is really going to work going forward.
Absolutely. And what do you think are a few red and green flags that you look out for when, selecting managers?
Now, this can kind of go across whether it's a healthcare manager or a non-healthcare focused manager, just in general. Some of the few, red flags that we look for really turnover. If you have, say, a team has a really good track record, but those individuals have since left the firm, that's a huge red flag. We want the individuals that have found those deals, done those successful deals in the past, continue to do more deals in the future. We want to have that stable track record. So stable team is number one. It really comes down to three things: strategy, team, returns. The strategy needs to be a great fit for clients from an asset allocation point of view. You need to have a stable team and a great track record. If it's a new team spinning out, can they take that track record with them? Can they point to what they've done in the past? And their expertise within a certain sector, the sector specialist. Are they truly, specialists in healthcare, in IT, in whatever the sector it is? Do they have the expertise to make the good decisions based on really more than anything, science?
Are you actively investing in venture capital? Like, do you interact with venture capital within the healthcare sector?
Yes, kind of yes and no. So the answer is opportunistically would be probably the best answer I could give you. That we certainly do invest in venture capital within healthcare and other areas of venture capital. But recently, with a sell-off in 2022, especially in later stage venture and growth, client interest really has not been there. Most of our clients, and we really, if we are going to go into venture capital fund, we're looking at seed stage and Series A. We really think that's where you get paid to take that early risk. You want to be in early. You want to be in the seed stage or in the Series A.
And may I ask why? Like, could you elaborate on why do you think that?
It's really driven by valuations. More than anything, you saw a big run up in valuations and for 2020, 2021, then you saw this huge sell off. You see, getting in early is definitely you're getting in at much lower valuations, and that can over the long term lead to better outcomes.
Absolutely. And owing to the current interest rate environment, what are a few factors that you keep in mind while allocating in venture capital?
Well, most venture capital is equity investments, so it's not, especially if you're going the series, the seed and Series A, so it's not that big of an issue. Where you would consider, more in interest rates or in the late stages or really into the growth stage, where the company might be, taking on some leverage on its balance sheet in order to grow the business. That's when it becomes more of a factor. We're not really excited about those areas right now. They're definitely out of favor. But that said, with interest rates coming down, hopefully we'll see if we get a cut in September. That could make those areas more interesting. But a lot of that debt that these earlier stage companies have taken on, more of the growth stage companies, and into the buyout, really more talking about buyouts here than venture, is variable rate. And so that rates have increased considerably over the past couple of years. It looks like they've peaked. So that certainly put a big strain on balance sheets and made, it harder for the buyout managers, to do deals. So you've seen a lot more smaller deals getting done where they can do them off of the balance sheet for M&A activity in the buyout space, a lot more add-on activity versus larger platforms getting done. Certainly there's some activity there, but not where it was a couple of years ago. But that the interest rate has really hit the buyouts much more than what you're talking about in the venture side, because they tend to be equity investments.
Absolutely. And through your venture capital sleeve, could you highlight a few subsectors within that early seed stage? Could you highlight few subsectors that you're focusing on and why?
Again, this isn't really a big focus of ours right now, venture capital in general.
Yeah.
But healthcare technology, early therapeutics, and healthcare space is definitely anything in that space, even med tech, really, in technology, SaaS. We still think SaaS model is still a great business model.
But how long do you expect this trend to go on for? And what do you think might be the next big thing in PE after this?
As far as this trend in healthcare goes, it's obviously really challenging to predict how long a trend will last. That said, as far as healthcare is concerned, really look at the population growth, the aging of the population. The answer to that is, as we talked about earlier, the baby boomers, particularly the aging and the graying of the population here in the U.S. and globally, is really what's driving a lot of this trend. Most of I think the baby boomers end in the early 60s, so they're in their late 50s and 60s now. So you can see this trend could really continue for a couple decades. But that said, any investments in technology could also continue to drive this trend, even longer. Who knows? I think we're at the early stages of how AI will be integrated into, healthcare, whether it be in the pharmaceutical side or even healthcare tech and med tech, and what it can do with different diagnostics, to things of that nature. That could really change it and continue the trend for longer. The next big thing in PE, I'm not even going to take a guess at that. There's no, economics will drive that in the future. Where that's going to be, I honestly don't know.
I completely understand that. When I was thinking of that question, I had so many follow-up questions that it's very difficult to answer that right now.
Yeah, it's almost too big of a kind of a question to answer. I mean, you could say, well, where's the next big PE? Is that going to be, the North America is a huge, largest private equity market in the world. Does that mean, as valuations increase here, does that mean we're going more into smaller, more growing economies? I don't know. I mean, it really, there's too many factors involved in that. They could shift that one way or another to really answer it adequately.
Absolutely. And I'm very curious to know, what does your due diligence for managers look like? Like, what are the factors other than the red and the green flags? Is there anything else you consider in your due diligence process?
Yeah, but that could take us about an hour to be honest, to do that justice. I mean, that could be another conversation. There are a lot of factors we look at, and when we look at managers, the three big buckets are strategy, team, returns. But when you break each one of those categories, breaks down into about 10 other subcategories. And then, of course, there's all the legal due diligence and operational due diligence that we do on their back office. And now, ESG is a big part of what we do. We look for managers that have integrated really good ESG policies, not only across the firm, but especially across buyout managers. We want to see them integrating good ESG and DEI policies down into the portfolio companies, just not for themselves, that help, put those good, values, because it is a big deal. A lot of people think, why is ESG important? It is incredibly important, because just if you look at reputational risk alone, if something goes wrong and you don't have a good ESG framework within your portfolio companies, the reputational risk can just be devastating to a company. So those are just at a high level. I mean, like I said, we could spend an hour on this conversation. They could be, probably should be a separate conversation. But obviously all the legal work, back office work, and like I said, those three big buckets, there's probably 15 other categories under each one of those that we dive into.